In this video, I want to talk about inflation and dollar devaluation because this has been a huge topic of conversation over the last, say, 2 years, over 2021 and 2022. We've seen prices for everyday goods skyrocket. So I want to talk about where inflation comes from and how it's tied to devaluation of the dollar. So before I get into dollar devaluation and why inflation is happening, I just want to recap inflation itself. So over the past year, in 2022, we've seen prices for commodities like lumber and energy like gasoline and natural gas starting to come down around the world from where they were in late 2021 and early 2022. But we're still seeing really persistently high inflation in goods and services. And in any case, at least the Federal Reserve in America noted that while the Fed's goal is to stabilize prices, they've acknowledged that the price level will never come back down to pre-pandemic levels. And for some food items like ground beef, that's really significant considering that prices are up 50% or more in just the past 2 years. So before we get into what we might do about this, let's address how and why this is all happening. So what you've probably heard in mainstream news to explain inflation is supply shocks. So that might partially explain some of the sharp price increases that we saw in prices over the last 2 years. Coming out of the pandemic, many industries needed to restart and ramp up production to meet new demand that was coming online very fast. People who wanted to go out and enjoy themselves, go to restaurants and whatnot. And that takes time for businesses to restart and get back into a groove. Energy prices in Europe are no doubt affected by the Russian invasion of Ukraine and the subsequent sanctions on Russian oil and gas producers, which supply about a third of Europe's energy needs. However, the longer inflation remains elevated, the less likely supply shocks are to explain the entire price inflation that we've seen. In any case, supply shocks still only tell a short-term story over the last year or two, while they obscure the long-term truth. And the long-term truth I want to talk about is devaluation. This devaluation has been very, very persistent. Behind the giant persistent devaluation words you'll see here is the drop in value of the US dollar since the inception of the Fed in 1913. We went from an index of 100, which is at the start of 1913 on this graph, down to, I think it's somewhere around 3.4. So we've lost 96.6% of the value of the dollar over the last 100 years. So the inflation that we've seen over the last 2 years is really a part of a long history of devaluation that's just suddenly going out of control now. As the US, we're struggling to export our inflation to other countries as we've done in the past, and I can link below an article that explains more about how the US exports inflation. And we, after the pandemic, started handing money out to everyday people, not just via financial institutions as was done in all previous recessions and financial crises, like take 2008, for example, where the government bailed out banks and lowered interest rates, allowing banks to give more loans and increasing the demand for financing with very low interest rates. In 2020, money was handed to everyday people in huge amounts and to small businesses, which means instead of going into the financial part of the economy, it went into the real economy. So we saw not only a massive increase in the money supply in 2020 and in 2021, we saw that money go into normal people's hands and then into real goods and things that people need to survive, not just assets and things that financial institutions deal with. Persistent devaluation has existed really since the beginning of the dollar, but starting in earnest with the creation of the Fed in 1913, and especially in 1971 when the dollar went off the gold standard. There are several events on this timeline alone that show how the dollar has lost value over time due to these different agreements and crashes and responses to those crashes. So one thing that you'll hear a lot in the news today is about dollar strength, which might lead you to think there's a reversal in this pattern. So the first thing I'll say is that dollar strength refers to the US dollar gaining strength against other foreign currencies, which is not necessarily against goods and services. In the last year, as the US Federal Reserve has raised rates to try and fight inflation, we've seen the dollar still diving in value versus goods and services over the past year, despite the Fed moving its target interest rate from near zero to over 3%, which is a high not seen since before the 2008 crisis. But we are seeing this kind of flood into the dollar and out of other fiat currencies. And I want to talk about this briefly. So there's a theory in the financial world called the dollar milkshake theory that I've been reading about for a few years now that's really coming to a head now and coming true as we're seeing with other fiat currencies. This theory was created or at least popularized by Brent Johnson of a fund called Santiago Capital. Essentially what the dollar milkshakes theory says is that the world is awash in dollar-denominated debt, which means that people are short dollars all the time. They always need to get dollars to pay off their debts. And this is not just corporations, but sovereigns, countries that are in debt with IMF loans or loans from large international banks, and they owe dollars. So this creates a massive demand for dollars. And when the US then decides that they're going to increase interest rates, this creates a scramble for dollars as companies and countries are trying to get their hands on dollars to be able to continue to pay down their debts. And this leads to a massive demand for the dollar, and it pushes people out of other fiat currencies and towards the dollar. And the milkshake comes from this idea that while every central bank kind of fills up the milkshake with liquidity with all of their currencies, it is the dollar that sticks a straw in and sucks all of that liquidity out, creating a massive credit contraction. And that will force vulnerable countries to print more of their own currency to obtain dollars, or just completely abandon their currency and use the US dollar. And that causes the dollar and dollar-denominated assets to rise in value against all other assets. However, again, this theory only speaks to the relationship between the dollar and other foreign currencies, not the dollar's strength measured against goods and services. So what we've seen, at least over the last year, is that the dollar is losing value still at a high rate against goods and services. The dollar actually needs to keep losing value in order for the whole dollarized monetary system to continue to exist. Before I get into resolving debts, I just want to make it clear that all fiat currencies today, like the dollar and the euro and the yen, are based on debt. So taking the dollar, for instance, every dollar in circulation represents someone else's liability. So that dollar bill in your hand might be your asset, but it's not what's considered a bearer asset. It doesn't have value on its own. It represents someone else's liability. And that might be a dollar from a US Treasury bond that was sold to a foreign investor or to the Federal Reserve. It could also be from a loan from a US commercial bank like Morgan Stanley to a company or an individual, or even from one of the many quote-unquote shadow banks around the world that operate outside US jurisdiction but deal in dollars and make loans denominated in dollars. So all dollars that are out there in circulation were created through one of these loans, whether it's a commercial bank or a foreign shadow bank, or from a US Treasury bond, which is just a loan to the US government. So in order to pay back the rising debt, our economy either needs to grow tremendously, allowing Americans to pay more taxes so the debt can be paid down, or we can default on the debt and simply say we're not going to pay back all of these investors in US Treasury bonds, or we can print more money. So I want to go through these three options. The first option is to pay down our debt. And the US national debt as of the time of creating this video is over $31 trillion. And that equates to about $247,000 per taxpayer. When you look at that against the median income of the United States, you see how dire of circumstances we're in. Even if Americans were able to put every dollar they made into the national debt, it would still take almost 10 years to pay off. So you can see how this would be an incredibly painful road for future generations, especially when we look at the fact that younger generations have less and less of a share of wealth. The second option is just to default on the debt, to tell creditors who have bought US government debt and are owed dollars, we're not paying you back. The problem with this is because the dollar is the basis of so much global commerce and so many asset values, defaulting on US debt would mean a credit crisis like we have never seen before in our lives. It would also show the world that the US government and US population are willing to not pay their investors who bought US Treasury bonds expecting a return. And that would just crater confidence in the US government and the US world order, really, causing it to collapse. That would not just eliminate our debt, it would also bring down the dollar itself and all asset values. That's really not good for Americans. And our last option is to just print the debt into oblivion. So we could keep printing money to pay off the federal debt. And by printing, the US government and its beneficiaries can continue to keep this monetary system intact while kicking the can down the road. And this is the path that the US has chosen so far and will likely continue to take, in my opinion. This will mean more slow and steady inflation, reducing your purchasing power, similar to a direct tax that would be used to pay the debt down. However, this option will likely push more money into asset markets where the wealthy will benefit at the expense of the less well-off and the people who are less aware of how this system works. To just give you a visual of what happens when you print into oblivion, this is basically what the US dollar system has done for its entire history. The effect of persistent dollar devaluation since the day the Federal Reserve was created in 1913 can be seen on this chart. The number of dollars in circulation is up over 75 times versus the beginning of the Federal Reserve's data set, which is just in January 1959, does not extend all the way back to 1913. Over that time, the US GDP grew as well, but only 49 times over in nominal terms, so not as much as the money supply. Meanwhile, the dollar lost 96.6% of its purchasing power to date since the inception of the Federal Reserve. So this is what happens when you print into oblivion. The dollar continues to lose value and governments continue to reallocate more and more wealth. So what is the solution to this persistent inflation, this persistent dollar devaluation? Well, instead of looking at short-term factors like supply shocks, I'm interested in long-term factors like energy infrastructure and food production. To have abundance as a society, we need to supply the food and energy and raw materials that we need to survive and thrive. And we've done that very well to date. What we've failed to do is keep the money supply scarce, which is now starting to lead to scarcity in the food, energy, and raw materials that we need. And you and I are feeling that every day now. When we go to the pump, when we go to the grocery station, we're feeling higher and higher prices. It's more and more difficult to buy what we used to buy and enjoy and to have the lifestyle that we used to enjoy. And on a generational level, we're seeing that with millennials and Gen Z who are now feeling like they cannot have the lifestyle and all of the wealth that their parents and their parents' parents enjoyed. So what do we need to get out of this? What monetary system do we need that won't have persistent inflation? So what we need is a commodity that is fungible, uniform, and divisible like fiat currencies. However, it also needs to be a few more things that could improve upon the dollar system. First is accessible. It can be difficult to get bank accounts and convenient banking services for a lot of people in many places around the world today, especially when we're talking about dollar bank accounts. Instant transfer is also very important. This is also a story of banking access. We need to give people digital tools to transfer wealth instantly around the world to trading partners. Scarcity is very, very important. Fiat currencies are not scarce. That system has been slowly co-opted by the powerful in society who created this rich get richer system with persistent inflation. So we need a monetary system with a very scarce commodity at its core. We need rules without rulers. This is to say that the monetary system needs rules around private property and transferability, but we need to shy away from having rulers who can change and alter those rules, because that ends up in a system where those people create a system that benefits themselves. This is the problem that we ran into already over the past century. And finally, we need a system that's resistant to control. We need a system that also is built in such a way that it's very difficult for rulers to emerge over time in that system and co-opt that system so that they can change the rules for themselves, just like what happened with the dollar system. So what system could exist like this today? Well, the one that I am most interested in is Bitcoin. If you might think this is a total scam, I've read into Bitcoin quite a bit over the last 6 years, and Bitcoin to me checks all of these boxes. It is not a debt-based system, it has no rulers, and it demonstrates strong assurances against government and corporate interference in the operation of its monetary system. It's a very neutral monetary system that I don't believe will be co-opted by governments and powerful entities to make it benefit them versus the rest of the population. It has a very clear, transparent set of rules that anyone can audit and look at, given that it is just open source software running on a bunch of computers all over the world. So this makes it a very strong counter to the existing closed door monetary system that's operated by a small group of people, and it makes Bitcoin a natural option for those perhaps wanting to migrate out of the current monetary system, which is essentially designed to destroy value over time. So the last thing I'll leave you with is you need to do your own research. Do not take it from me. Do your own research. Come to your own conclusions about how Bitcoin may or may not provide a way out of the constant pain of inflation that we find ourselves in today. So watch more videos. Read some books about Bitcoin, read more articles about it, try to absorb as much information as you possibly can and come to your own conclusions. I've included a few resources below that I've written to further explore inflation and our monetary system, which I think helps people understand what the problem is that Bitcoin really solves. And then I've also included some intros to how Bitcoin operates so that you can understand how the system works. But again, don't take it from one video. Don't take it from just me. Read, research, understand for yourself what's happening here. Thanks for listening.